Buckle up and get the Dramamine. This ride's only just beginning. What's up, everybody? Welcome aboard to Bubba's Bottom Line. And before we get started today, we do have to send out our thoughts and prayers to those in Pittsburgh and those around the world that are suffering from these ridiculous, stupid shootings and these attacks on different groups. It needs to stop. We need to stop it. And our thoughts and prayers go out to everybody affected. And that means everybody, because as a world, as a nation, we are affected by the ignorance and stupidity of these people, of these hate mongers, and these people that are being stoked by, we won't mention that today, but it's a terrible event, it's a terrible thing, and our thoughts and prayers go out to everybody. In the meantime, this market has just begun. Again, we look at this and we talk about what's going on and the things that are affecting this market, and this ride of volatility is only begun. As we have talked about 4 weeks, we felt that the market tops are in and that we're now waiting for what will eventually be a black swan event. And of course, we do believe that that event is going to be interest rates that continue to rise because the Fed can't control it, and because of other things that are going on, and the way that we continue and try to forget what the news actually is. Again, one thing you know and you learn about markets in history is that when we ignore bad news and the markets can only go up and only focus on the good news, that is the typical action of a bull market. When the bad news starts to come into play, you start to know that the markets are starting to change. And I think that's something that we've seen over the last few years, is that bad news has maybe paused the market, maybe created a small sell-off, and then the buyers came in, whereas good news, the market just took off. I think we're now reversing that, and we're starting to see that good news is pausing the market from going down, and bad news is sending it much lower. And I think, again, these are things that we're starting to see within this market. We're starting to see certainly a dramatic change as President Trump continues to harp on Chair Powell from the Fed. Now, again, I do not agree with what President Trump is doing. I think, of course, I think the Fed should be abolished, so there should be nobody to focus on there. But since we do have the Federal Reserve and it is not going anywhere anytime soon, I don't think it's the president's place to chime in and tell the chair about rates. However, I think that we're seeing that because they try to manipulate rates and because we can't get things on the right track, that will be the eventual problem. And you could even get into a blank contest because, as Yellen did back in December of 15, she raised rates basically almost in spite of what was going on. And I think you could get that again, but rates should be higher. Again, there is no reason for rates to be at these levels. There is no reason to have a flattening and most likely an inverting yield curve. Okay, but we have, of course, you've got these things, and this is what happens when you have a market that is totally manipulated. We have had a lot of complaints from a lot of the companies that have already reported, well, the dollar's too strong. Well, if you had a true free market, the dollar wouldn't be too strong. The dollar would be worth what it's worth. The problem here is that you have the Fed meddling and trying to adjust and take care of rates and all these other things. This is why we've got such a diversion between all the different nations and the worlds across the globe with interest rates, because we do not allow the free markets to take place. We continue to let the central bankers, who have absolutely no clue of how to answer and how to be involved when the markets are out of line. The markets themselves, put themselves back in line. The free market system puts itself back in line. And I think this is one of the big issues. And of course, that's why I believe that the Fed is worthless. That's, again, my opinion. I think that you don't need to have somebody dictating what monetary policy is, because, again, it just goes back to the very simple thing. Free markets figure it all out. That's what happens. There's no other way to do it. That's price discovery, and free markets figure it all out. In the meantime, we're starting to see some major misses in some news items. You've got durable goods, which is the production of long-term goods, very, very weak. A very severe miss here. And I think, again, these are things that start to creep up when you continue to kick the can down the road, you continue to ignore every problem, you end up with, of course, these major collapses. I think one of the things we might have learned and should have learned from history is markets will dictate what's going to happen. It's like a sporting event, okay? The tempo of the game, sometimes they're fast, sometimes they're slow, but they always figure out during the rules of the game. It's no different here, okay? You've got the markets that will figure things out if you allow them. But again, when you try to tweak, you change the way that they're going to set up. And of course, that's really why we have these such big boom and bust cycles, and why we're going to start to see, I believe, that this market's going to take a major turn to the downside. Now, we're not a perma bear. We're not telling you that the markets are going down forever. Again, we believe in staying in the market. We believe the greatest creation of wealth comes from the markets. Okay. However, you have to let the markets trade. When you create these boom bust cycles, you're going to have people, and this is going to be something interesting that's going to happen. You're going to have people when this market does finally correct, that have made a lot of money throughout this market cycle, but now the tax bill is going to come due, and they're going to lose a lot of the money on the way down, which will create just another problem. Okay, this is as we said on the opening, this is going to be the roller coaster. This is when we're going to see volatility become much bigger. Right now we're trading, the markets are at a 25% volatility. The VIX trading at just under 25. Obviously much higher than we're used to. Now, if you go back 15, 20, 25 years, that was the normal volatility. But because we were able to move things in, and we were able to, more information, computers, the whole thing, you could hone in and you could actually make the volatility less. So we got down to around under the 10 level. Now, I would say probably the right level for the VIX is probably about 15%, okay, which would be a right number to have some true markets and have them trade the way that they're supposed to. But of course, we get these cycles, and you get the explosion in volatility, which is really a design on fear of the unknown, fear of things that are going to happen, because we are seeing a lot of things in these markets that are certainly creating a fear. Okay, so now housing has become very weak and is missing numbers. You've got a whole strew of things in the market that are now not making sense, that we can no longer cover up. Okay, you've got the overall volatility portion. Why are we getting so volatile? Because there is becoming so much uncertainty out there because we're seeing earnings. We talked about how earnings would be probably pretty good, but how are they going to look going forward? All right. And you have, of course, the major companies complaining about the dollar, which I always wonder, why can't we you could hedge the dollar. Airlines hedge fuel costs, of course, but they're complaining that the fuel costs are going up, but they already hedge fuel costs, so they already know their cost per seat. Companies can hedge the dollar. I mean, what are all these derivative markets for? I mean, they're basically made and designed for the companies to hedge against overnight risk or risk in the price of their commodity, yet we don't have them taking advantage of it. But I think it's easier for them to make an excuse and say, well, we don't have, the dollar was too high or this. So I think it's easier to make an excuse than it is to do anything else. And I think that's one of the bigger problems that we look at. So as we look into the future here, all right, why are the markets going to end up melting down? Well, I think that, again, you put yourself in a position that there's no other adjustments that you can make. You've allowed the banks to continue to get deeper and deeper into the hole. Now, again, you can say what you want. And again, this is my opinion, but I don't believe that the banks are anywhere near as strong as we're being made out to be. Okay. Again, I think that the banks are in a lot of trouble. They are making a lot of bad loans once again. But when you know that the Federal Reserve is there to bail you out, you don't have to worry about making a bad loan. But I happen to know some information, okay? Again, this is not inside information. It's just some of the people that I know that are in this business are telling me that they can make any loan they want, and there's a list of banks waiting to buy those loans. So if that's the case, are they not buying bad loans once again? And this is, again, the same problem that happens all of the time. This is the problem that we always tend to ignore because this time is different. And we know that the markets are never different, and this time is never different, right? And I think that this is a problem that we see that's going to continue to grow because you cannot continue to lend out bad money. Because really, if you think about it, the Fed obviously creates money. The banks are also creating new money because again, when you can lend out at 10 to 1, okay, are you not creating new dollars? Okay, so that's the issue. That's why when you default on a bank, somebody who's really big, they don't want to foreclose so fast. They just figure out a way to make the payment better and make the payment lower so you can pay it over a longer time because that's actually the way that their accounting shows. It gives them a profit. All right, and this is one of the issues. You're starting to see this collapse throughout because of the contagion and things that are starting to happen here. When things change, okay, it makes the system blow up. And again, this is as interest rates continue to rise, this will eventually create the blow up, which is what we've talked about. You know, what is wrong with a strong dollar? I continue to hear people whine about a strong dollar. What could possibly be wrong with a strong dollar? Nothing, okay? But again, if you're talking about, well, you know, going out, you know, if I'm going to Europe, it's great to have a strong dollar. If the Europeans are coming here, it's not so great. But again, this is where if the central banking system would get the hell out of the way, okay, then the markets would price themselves. You know, asset classes have the ability to price themselves. It is called a very simple thing. It is called price discovery. But the more we try to take out price discovery, the more it creates a benefit for the very wealthy and not for the average middle class. That is really where the issue comes into play. And you've got a market right now that is on the tips of having some possible destruction. Now, we're not predicting that it's going to happen tomorrow. We are not telling you that tomorrow is the end of the world. What I'm telling you here is that all signs point to that the tops of the markets are in. The markets are priced for perfection, and the next big move will be to the downside. Now, again, is that a guarantee? No, but all things look like the markets are ready to break down. All right, you got everything at high values, and if you didn't pay attention to Thursday's action when the markets were exploding to the upside, and why were they exploding? They were banking on the fact that Amazon and Google were going to deliver great numbers. Well, they did not. They delivered good numbers, but numbers that were already priced in. Remember, the markets are very efficient in pricing in information. Okay, markets are very efficient in pricing in numbers, and if we let the markets work and let them do their thing and keep them free markets. Notice the theme today, free markets. This is what President Trump is trying to do with trade, is have free markets. If we let the free markets work, okay, then we don't have these issues. But when you continue to try to connive and manipulate and move things around, whether you're the individual company trying to get that big boost, you know, everybody's got an angle behind why we have a report that we do, which would be great to take out these quarterly earnings reports, because all they do is create ways for us to manipulate. Those of you who might have been in sales at one time or another all know about what we call about bagging the order, right? You got a couple of orders, you got a quota, you've already made your quota for this month, so why not bag the orders for next month's quota? Well, that's what the companies do, the same thing. They figure out a way. Why? Because it gets the best reaction to their stock, all right? They benefit by a higher stock price, so if you create that illusion, I mean, how many times are we going to watch Apple under-promise and over-deliver? Again, you think that's done by accident? Do you think it's just pure happenstance that these things happen? It is not. It happens all the time. Okay, and I think this is one of the issues that needs to be addressed, because that goes back into more of how these markets get slightly manipulated because of all these little different facets. And if you've got the capital to play it that way, then you can obviously clean the clock. And I think that's one of the big issues. But in the meantime, we've got more. We're going to come back after the break with more of Bubba's Bottom Line. Of course, I want to remind you that we did a hedging webinar last Saturday. We've got a new class starting this Tuesday, October 30th. If you'd like to get the webinar, if you'd like to hear it out and see if maybe you'd like to participate, email me at bubba@bubbatrading.com. Tell me you want to see the webinar. In the meantime, don't forget about our high school investing program. If you want to help us out, it's at Patreon, patreon.com/Bubba Trading. And you can help us out. So it's patreon.com/Bubba Trading. In the meantime, let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz. And of course, as we said last week, was a little bit wild, and we had our 5th consecutive week down in the equity markets, and I think no real surprise. I mean, we've kind of been predicting and looking for this, because the market footprints have been showing us that there are some major issues in this market. And again, it goes back to the earnings. Markets are priced for perfection. I think that you make a mistake by listening to the advisors and those that are on air. If you remember that they have a agenda as to why they want the markets to be bullish, because they make their money by having you in the market, not out of the market. I also think that I'm a big, if you caught me on Fox this week, my constant message was, don't try to rotate from one sector to the other. All you're doing is creating commissions and costs for yourselves. Whereas if you own good, solid companies, then you can just stay where you're at. Okay, trying to time out. If you're good enough to time out the risk on and risk off trade, then you're good enough to be the greatest trader in the world, and you don't need to try to rotate around. I think that's one of the bigger problems that we create for ourselves. That also helps create some of these meltdowns. So again, me personally, I believe in being hedged and never getting out of the market. But even if I were not hedged, if I had good, solid companies, the only time I would sell a stock, if it was a company, for example, General Electric, that was breaking down, and there was the dynamics and the fundamentals of that company changed. Now, I'm a technical trader, but I do buy companies for long term because they're fundamentally strong. So what you would look for is, I would look for a technical level of a fundamentally strong company. For example, and I'm not buying this today, but if I were looking, I would be looking at Apple at 215. That looks like it's on support. Fundamentally, they're as strong as can be. And you're starting to see, a lot of these markets and a lot of these stocks have come down to some nice support levels. Okay, so again, if you're looking to buy, I don't think this is the right dip to buy, but technically, what you want to remember is you want to look for the right opportunity to get in. And I will always, cryingly so, tell you about the story that in 2008, when I bought Amazon at $30 in November of 2008, before the market cratered in March, Amazon went from 30 to 60, and of course I sold it, and I have not one share today at 1,600. But again, no market announced itself. So we know that we're seeing more new lows being made than new highs. That was a tip-off that the markets were in trouble. We knew that the Russell was selling off before the rest. That's another tip-off. These are all tip-offs of a market that is starting to give up the ghost. But back to, so when you're investing, there's no reason to try to rotate. You hear all this rotation, risk on, risk up, BS. Okay, the best thing to do is to stand pat. Only time to sell is if you are in something that is changing. If the company that you own is now no longer, the fundamental reasons that you bought that company are no longer valid, you move on. Okay, but of course the best is to be hedged. Then you don't have to worry about any of it, and you just continue to buy. And that's the other thing. As an investor, we talk about pay yourself first. You should always be investing in the market. Don't try to outsmart it, all right? Look, I've tried it. It doesn't work very good. Just keep continuing to invest money that you can afford, that you won't need tomorrow to pay the car payment, the house payment, food, whatever. Money that you can afford to put in, just keep investing. That's the best thing you can possibly do. No matter what I say about where the markets are going to go, yes, I think the markets are going to melt down here. But again, if I find something at a good level, I'm not going to not buy it because of that. I think that that's the opportunity, because a lot of stocks, I assure you, have already bottomed. Okay, I think the equities are going lower. I think the indexes are going lower. But a lot of stocks, and again, I don't have any off the top of my head, but I assure you, some have already hit bottom. Okay, so when they've hit bottom, that's when you want to try to get in, and you'll ride it through. Okay, because again, you then look at the risk reward, okay, versus how much lower it can go. Now again, they can always go to zero, but that's where the market psychology comes into place, and that's something. Remember, when you're trading, when you're investing, okay, you are competing against others for that market. Okay, this is a competition. Pure traders, obviously, what I do, and floor traders and things like that, we are in true competition with each other and with other people. Because if you think about it, if I'm a buyer, somebody's got to be a seller. Buyers and sellers have to always meet. So if you think about it that way, you are in a competition. Now, there's different competitions. If you're day trading, it's a very quick competition. If you're investing, then you turn it into a long-term game and not necessarily a competition, because you can withstand. And the only way you can withstand is to have the good psychology and also not be by over-leveraging yourself. Because again, we continue to build massive debt, which we will talk about in my commentary. But in the meantime, you have to look at what's going on in the markets. And what have we seen now? Okay, the cryptocurrencies. The cryptocurrencies have become very stable. So after going from 10 years ago, going from zero Bitcoin to 20,000, and Ethereum from whatever to whatever, all those wild swings, those have done. So now the markets have begun to more stabilized. Even through last week's debacle and the last 5 weeks down in the indexes, the Bitcoin has held up pretty well. That to me is a pretty bullish sign. Now again, I don't tell anybody to go out and buy that. I tell you truthfully, personally, I'm losing money on the Bitcoin. Personally, I think they're real though. I mean, the cryptocurrency world is real. I think it's going to be a big winner. I think it's very much like the internet. I think that you have to take, again, money that you don't need, okay, and not worry about, and don't go too crazy, because if we're right and they explode, then you make a lot of money without a lot of risk. Okay, but I think this is one of the signs showing you that this is also possibly a place for what we call stored value, kind of like gold. Now, gold has finally started to break out, okay? It actually pushed back through 1240 again on Friday before pulling back. But again, gold looks like it has now bottomed. In fact, we had our original range was 1180 to 1220. Now we're looking to be buyers at 1230. So we've broken out of first, and now the next key target to break out of is 1240. If we can get through there, okay, I think you then see 1275. Oil, all right? Now again, oil, we got forced out, and we're able to get back in with not anywhere near what we got forced out with. But it had that big spike high, all right? Now oil has fallen about 13 or 14% from its recent highs, looking to go a lot lower. Watch the 64 level just to see what happens, but it looks to be headed significantly lower now. But again, there will be some bounces. Again, nothing goes straight up or nothing goes straight down. There are always peaks and valleys in there and reasons to either buy or sell depending on the time frame. The bond market has pushed its way higher. I think it's pushing itself right into resistance right now. And what I'd be looking for here now is a spot to sell treasuries, as we believe that interest rates are going to go much higher here. So I think that you'd look at this level here as a good spot to possibly sell. The big thing, the dollar continues to push up against new resistance. We're looking for the dollar to break out. We're looking for the dollar to go to par, which ties in with selling interest rates, because again, what we expect and what I think will be the first bombshell is when the 10 years get to 3.5% and the dollar gets closer to par. That will be the first big shot heard around the bow that will create, I think, the first leg of this big down move coming. Because I'll say it here, okay, it is Sunday, October 28th. I think that we have in the next year or so, we've got a 25 to 40% haircut coming in the market. And again, it will not be in one day, and I'm not going to not invest because of it, but that's what I would look for coming throughout all this as it turns around. It's not a secret. I've published my opinion. And again, remember, that's an opinion. That's not a fact. So as you're trading and as you're investing, make sure you do your own due diligence when you look at this. I think the grain markets I tell you, it was a really scary week in grains. until Friday. It looked like it was going to be, oh my God, we're going down, and corn and beans look almost identical right now the way that they're trading. Corn had a very nice move up on Friday. Beans not as strong as I'd like, but fine. But a real tricky one was wheat. We had predicted a big move in wheat, and we said that we felt it was to the upside. Was it nauseating when it went to the downside? And then it popped 20 cents on Friday, 17.5 cents. But so it's back into that area of that big consolidation. So we got one big break to the down. We're still looking for a break to the upside. So hopefully this will be the area where it'll break back to the upside now and make that big move to the upside, because we're expecting much higher prices in all of the agricultural goods, but certainly very higher in the grains. And of course the meats look great. When you look at feeder cattle, January came right back down to a level we've been watching, but still trending higher. Fat cattle or live cattle looks to break out to the upside, and hogs recovered all of last week's losses and now look poised to break out to the upside. And I think these are things that, of course, we're looking at, because this is also showing you the potential cycle shift that we're starting to see. Typically what will happen is when equities start to break, that money will be looking for a new home, and we think it's going into grains and or livestock and some of the other commodities, okay? And I think that's something that we want to look at. And as you say, why are there problems? Why I think a lot of the problems out there are because of debt. I think you can see the IMF is giving $56 billion as to Argentina. There's a lot of issues out there. There's a lot of problems. But the worst thing that's out there right now is there's too much hatred, too much of the pipe bombs, too much of the killing at the synagogue. We need to stop this, okay? We need to make it stop, and we need to make it stop now. It's a tragedy, and we need to really address this, and we need to get rid of all of this hatred that's out there. Again, obviously we're never going to get rid of it all, but what we really need is we need the politicians to quit opening up their yap and talking about it and stoking the embers of this hatred, because it makes it more acceptable, and that's wrong. It needs to be stopped. We need to end it. In the meantime, we're going to step out here for a break. This is Bubba's Bottom Line. We'll come back with my commentary right after the break. Hey, everybody. Again, remember, I did a hedging webinar on a week ago, and we have the new class starting on Tuesday, October 30th. If you'd like to participate and you'd like to check out the webinar, you certainly can email me at bubba@bubbatrading.com. I'll be happy to send you a copy of it. You can see if you'd like to join among and protect your portfolio. And of course, don't forget our high school program, highschoolinvesting.com. If you'd like to help us out there, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, I got something that I could comment on, but I do want to comment on the way that we treat the market and the way that the pundits treat the market, and the amount of debt that we're facing and the problems that we're facing, because I think it's important. I think we continue to ignore it. We continue to kick the can down the road. We've got what we'll call the 4 pillars of debt right now. You've got margin debt, which is the big one right now, okay? Why is margin debt the big one? Margin debt is all those people that are borrowing money on stocks they can't afford, okay? They're trying to leverage out, and they're going to get margin calls, okay? We are seeing right now there is a record amount of margin debt involved in this market right now. And every time it ticks lower, it creates more selling. This is what's going to eventually cause the big bubble or the big pop here, is the margin debt, okay? If you go back to 2008, Lehman Brothers and Bear Stearns were leveraged at 38 to 40 to 1. Okay, when you over leverage, all that means is you're getting twice as much bang when you're right, or 3 times, whatever your leverage up, but it also means when you're wrong. And when you're wrong, you don't have you don't get the final say so when you're wrong on margin debt. Because when you're wrong on margin debt, if you overrun your debt, you get the margin call you get the tap on the shoulder from the brokerage house or the clearinghouse. And they say, are you selling or are we selling for you? So again, very important to understand. You've got auto loan debt, which they're now trying to create more Okay, we've already got a record amount of auto debt. Now you're going to be seeing back to that phony 0% financing. They're trying to put more paper out because they're trying to push the kick the can down the road. Okay, you've got student loan debt. Okay, a major problem. Okay, that who knows how that's ever going to resolve out. And of course, you've got corporate debt. Okay, you've got all of these things that when interest rates kick up, it affects them all. Okay, so the manipulation can try to continue, but we see it's going to be a much bigger problem. And that is why the pundits and the people on air have to address the potential debt bomb that is happening. Because until we solve the debt problem, true growth and the big movement and ignoring and getting rid of what the Federal Reserve is doing is the only way to get it done, is to really address this head on and get this debt under control. Because again, it's going to be ugly. This time is not different. Don't think that we're going to be able to ignore it and that the Federal Reserve is always going to be able to bail you out. Watch. I'm warning that this is a problem. This debt is a major issue. It cannot be eliminated. And the farther we diverge from other countries, that's going to cause more of the contagion. It creates all amounts of debt across the board. It's time to be very careful out there. Okay, again, investors should not worry. Traders look for the short side. But again, what I'm saying to you very carefully is do not over leverage yourself, because there's always the opportunity for something to show up that will not make you very happy. In the meantime, as always, I thank you so much for being part of Bubba's Bottom Line. And we do want to say our thoughts and prayers once again to all those who suffered, especially at the synagogue. Very tragic event. We're very sad and hurt by it, and hope that we can get away from all this. And of course, I'm glad they caught the pipe bomber, and I'm glad they caught the guy from the synagogue. And we need to really work on being a one America and quit being so divisive and so much hate. Okay, it needs to be stopped. We need to take care of it, because after all, we are all under the same cloth. We are all Americans. Everybody have a great weekend. As always, I thank you. And of course, tonight's football game, we like the Minnesota Vikings against the New Orleans Saints. Have a great weekend, everybody. Thanks so much. We'll see you next time on Bubba's Bottom Line.